Good evening, TheoTrade. This is Corey Rosenblumen. You're watching the Theo nightly video for the 8th of December here in 2020. And do not adjust your screen. That's a new all-time high. But doesn't that feel similar? Haven't we been here 1,000 times before? Yeah, it sure feels that way. But don't get too bulled up at the high. And that's the purpose of tonight's video. And even though we may and probably will get higher prices to come, I want to draw your attention, at least at the start of the video, before we start talking trending stocks and updating the positions, on what's happened in the past and sort of where we may be. There's a little famous saying in the market that says the stock market takes the escalator up and the elevator down. You may have heard it the other way. It takes the stairs up and the elevator down, which just means there's risk for both sides of the market. So if you are a long biased trader, the trend is up. The market continues going higher. There is a bullish general drift of the stock market, but that doesn't mean it's always the same when it goes down. And that's the point. So whenever the market does, this is the S&P back to about 2011 to current. And you can just, it's a price-based chart, so there's no percent functions here, it's just the prices itself. And the main idea is that the markets can creep. They can ooze, right? When the market does higher highs and higher lows, that is an uptrend. This is considered normal behavior. This is a weekly chart again. So it's a few weeks up, a few weeks down, a few weeks up, a few weeks down. Take a little step forward, take a little step back, up and down and up and down. But if the market gets a little bit overextended, a little bit too high, the most recent example, maybe not the most recent, but a critical or key example, is when the market gets sort of out of whack, out of step, and out of balance. So higher high, higher low, higher high, higher low, all is well. So the market should have pulled back right there, but it didn't. It went 5 weeks up. So that's a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, upwards of 15 or so up weeks just about in a row. And the market did not continue gently trending to the upside. Even after that, it kept going up, but it crashed. So 2 weeks in a row sent the market destroying, ultimately, where it achieved with small, incremental, stair-step, creeping, oozing gains. And then wiped it out to that level. So in 2 weeks, the market blew through, really since levels not seen since about September, October. So that's where the seasonality, there typically is a little bullish end of year seasonality, but 2017 into 2018 took that a little farther than it should have been, and the market rubber-banded back. So take that logic and put that here again. Again, this is weekly S&P, just setting up to where we are right now, what the thought process is for the moment. Not necessarily really overextended, but still about 12 weeks of the upside with nary a pullback. And then it looked like this in real time. All right, let's short here. Oh, that didn't work. Let's short here. It didn't work. Short here. It didn't work. And then all of a sudden, yes, it did. So I'll explain what to do, how the positions, and how to think about the market. But I first wanted to establish this concept of the market steps slowly to the upside and then tumbles to the downside. So the bear side is not equivalent to the upside. That's why the puts tend to work. That's why there's a little premium or different little value or risk to the downside, because at any point in time the market can crumble and tumble. But that's not the way it is. We don't really see the market crash. You can certainly call that a crash, but that's 4 weeks in a row, and that was done away with 2 weeks. So this is a crash, this is a creep. So the market prices that in, because at any point in time, any headline risk, and was anybody thinking COVID or a global pandemic as we entered into 2020 in January, February? Probably not. But the pattern is about the same. That's what I want to communicate. The markets at the end of the year do have a little bullish upside drift. It can continue, but the risk is that it crashes. I don't want to say randomly, but it does crash. So if that's the case, markets can drift at the end of the year, drift through the Thanksgiving, drift through the December holidays, drift to the new year. What should we do? What's our thought process? Well, that may be occurring again. So we continue this bullish upside drift if the market does sort of burst through And I'll get the key levels for us here. It's about 3,700 in the, I'll start with the S&P futures. So just go back to the daily chart, pinpoint these levels. It's about 3,700. For the Nasdaq, that's hard to tell, but about 12,600, maybe 13,000 in the Nasdaq. For the Dow, that's at 30,000. That's 100 points above it, but still not pervasively or impulsively bullish. It's the Russell that has caught the bid, and that's our small cap index, the IWM, which is our tradable ETF, and the Russell itself. That's been the ignited market. It's playing catch up, sure, to the other indices, but it is rallying very sharply. So that's not creeping, that's really cresting higher. But again, markets stair step their way up gently and then take a tumble, or they take the elevator down. It's the same thing. Incremental, slow gains, slowly putting on the put positions or the wrist twist spreads or maybe the infinity spreads or something that is protective, something that is delta negative, building the position, taking the time, taking the heat, taking the frustration, but knowing that these things don't end well. Every day, in this case, literally takes you closer to that elevator event. But that elevator event is unpredictable. It's just a given that the market will retrace and pull back, but it probably will not do so 11, 12, 13, 14 days in a row to the downside. It'll probably cover that ground in about 2 to 3 days. So as Don likes to remind us, and very correctly so, if you are not prepared for that scenario now, when it happens, it will be too late. I do not think we're there yet, but that is the logic with which we can appropriately approach the market. As we go through November, we've gone through November into December and into the new year, we very well may continue seeing bullish creep, bullish drift, bullish stairs. And if you're doing the profits on the long side, there's plenty of stocks to do that with. That's what I give you in terms of the scan list. So we'll just take a look at some of those to update today's chart with us. And this is our strong stocks getting stronger. These are stocks by market cap making new all-time highs. Just to name a few, we'll pull the charts up and see them. Disney, which is right here. There's Disney. And Pfizer. I know that's a news-based stock. Nike. AbbVie Labs. Also talk about Qualcomm. Just get in the trend, get long, get bullish, pullbacks, retracements. There's Broadcom. Texas Instruments hit the bid today, hit the market up today. It was a big move this morning, and that continues the uptrend. Honeywell continues the uptrend. We talk about FedEx is one we keep continuously reference. That's a strong stock getting stronger. Lam Research, that's one that's cruising for a bruising, but it's creeping a little more powerfully higher, increasing risk to the bulls, because at any point in time, this will pull back most likely. But unfortunately, it's hurting the bears, the ones that are doing the right thing, playing the probability, playing the fade, and asking for a short-term pullback. This continues to go higher, and other ones in the list as well. There's actually 47 stocks in the S&P 500 making new all-time highs, or 52-week highs, some of them new all-time highs. So that's the logic that I want to leave you with, or give you in this video. And it's just looking back at past performance of the market. History repeats itself, not perfectly, but human behavior and the way we think of things, right? That's what the market is, just supply and demand. It's humans trading humans. Traders trading traders. So at the end of this most recent year, creep to the upside. This is not the first time we've seen this. If you're a new trader, this may be frustrating, or the opposite. This may be profits upon profits upon profits for you if you're going long. But I'll give a warning to the bulls. What you see today might not be the future tomorrow. And you may be in a position where all the small gains you achieved on the upside are taken back from the market just in a few weeks or days. But if you are a bear and you are losing short-term profits and short-term trades and things are going against you, hold the position, play the probabilities, play the structure, and play the probabilities as they go, knowing that at any point in time, and we don't know what that day is, and it may be in 2021. And that's what happened in 2020. And I'll take you back one more time, back into 2018. So that's what we possibly are in now. Fundamentals are different, situation is different, but the market doesn't change. It's that which goes up gently, crashes hard. Please be careful and safe. This is Corey Rosenblum with tonight's Theo video update for December 8th, 2020.